Hello everyone, today we are going to present our paper about investor response to merger and acquisition, evidence from consumer goods sector in ASEAN with abstract ID AIC 2021 EIEF 159. My name is Olivia Shannon Tandiana from Business Accounting of Petra Christian University, and the other author of this paper is Farhan Chandra. Corporate action is one of the instruments for investors in making investment decisions. One of the most common forms of corporate action is merger and acquisitions. Merger and acquisitions had proliferated in the last 3 decades. It also could increase the value of the acquiring company. Merger and acquisition transactions allow companies to grow faster, enable them to penetrate new markets, and broaden the company's scope. There have been many studies on investor response to merger and acquisitions before, and these studies have had different results. Most studies stated that merger and acquisitions are responded positively by investors. Other studies proved that merger and acquisitions do not have a significant effect on companies, and several other studies proved that investors respond negatively to merger and acquisitions. Merger and acquisition had become an increasingly widespread phenomenon, and the number continues to increase dramatically around the world, but research shows that less than 50% of merger and acquisitions are successful. Each sector has different results. Therefore, this research only focuses on one sector to obtain more specific results. Researchers chose the consumer goods sector because few have investigated the response of merger and acquisitions in this sector. This sector is one of the sectors that attracted the most attention of foreign investors by providing funding. Another researchers also stated that consumer goods sector is one of the most attractive sectors in implementing merger and acquisitions. Positive company signals will produce positive abnormal returns, while negative signals will produce negative abnormal returns. Regarding the differences in the results of research on investor responses to merger and acquisitions, this study contributes to providing evidence on how market reacts to announcement of merger and acquisitions in the consumer goods sector in ASEAN, because countries in Southeast Asia have experienced significant growth rates over the last few years. Previous studies have examined how investors respond to merger and acquisitions, but only a few studies have examined the consumer goods sector. This research is using 11-day SCAR and 5-day SCAR to measure the investor response as the dependent variable. And for the independent variable, we use dummy variable by giving 1 to the companies that conduct M&A in the research year, and otherwise will be given 0. For the control variable, we use market capitalization and firm growth. Data obtained from several sources, namely from Bloomberg, each company's website, Yahoo Finance, and investing.com. The sample used in this research is in accordance with the following criteria. The first one is the sample companies are companies in ASEAN that publish annual reports for the 2016 until 2020 period. The second one is the company has the complete required data. The third one is the company being acquired is a public company. Number 4, have stock prices during the study period. And the last one is the company is engaged in consumer goods. And for the data analysis, after collecting the data, we tested the data using SPSS software with classical assumption test and regression test. Then we analyze the data according to the results.
My name is Farhan Chandra and I will continue this presentation. Table 5 is the result of the regression test of the 2 event windows, CAR 11 days and CAR 5 days. Based on the beta and the level of significance for each CAR, market capitalization has consistent result, positive not significance. Meanwhile, growth has a negative significant impact, which indicates this variable has a negative effect. The dummy variable also shows consistent result in both event windows, which is negative significant. Data F in table 5 has a value of more than 2, which means that all independent variables can explain changes in the dependent variables. This study finds that investor response and merger and acquisition have a negative significant relationship. Market capitalization has consistent result, positive not significance. Meanwhile, growth has a negative significant impact, which indicates this variable has a negative effect. Research on merger and acquisition has reached a mature stage, but the research result on the effect of merger and acquisitions are still not convincing and have different results. Most studies found that merger and acquisition had a positive effect and received a positive response from the company, while other studies found that merger and acquisition had an impact and received a negative response from investors. Ron Nicholson et al. 2016 researched the effect of merger and acquisition in ASEAN and found a negative impact. This result is consistent with the finding in the study, which found a negative response from investors on the CAR 11 days and CAR 5 days. In addition, several other studies also found adverse effect and negative investor response to merger and acquisition. Limited information is one factor in negative response from investor. In addition, risk and failure in the past can also factor the trigger negative response from investor. Other researchers also said that the problematic post-merger and acquisition integration process and different sectors also affect investor response to merger and acquisition. According to signaling theory, signals reduce information asymmetry between the company and the market and provide a competitive advantage. Negative investor response to merger and acquisition indicates that the company signal is considered negative by the market, resulting in negative abnormal return. According to other research, a positive signal is a signal that is easy to observe and difficult to create or imitate. Credible and trustworthy signals will trigger positive response from investor. The study has limitation on sample because some data on consumer good companies in ASEAN are inaccessible and do not have complete data information, such as data of publication of financial statement, market capitalization data, and growth. The finding of this study confirms that hypothesis is rejected because it is contrary to the findings. Investors respond negatively to merger and acquisition by consumer good company in ASEAN. In the regression result of both event windows, the value on merger and acquisition is consistently negative significant. These findings prove that investors can respond differently to merger and acquisition. This situation can be due to economic factor of the country, company, sector, signal quality, and past failure. Thank you for listening.